These are past picks going back to March 10th of last year. We'll start off with Biogen. That one didn't work out so well, down around 36%.
Yeah, that one we got stopped out of in March, at the end of March last year. There was they missed a number. And we got stopped out of the stock. So we run stop losses on all of our positions. We know that in 20 positions, 2 or 3 will work out great. 7 or 8 will be pretty good and a bunch don't work. You got to use your stops.
You've no sentiment. No, you got to get out if it's
There's
not
like 60,000 securities we can own. So why wouldn't you want to own the ones that fundamentally are attractive and the price is behaving the way it should be, given what you think? I don't want to be the lone voice in the woods.
No, that's right. So Biogen, do you like it now, David? Or?
As I said earlier, we're not buying biotech right now.
Oh, yes.
We've not seen a reemergence of strength.
No, political climate and other things. NXP Semiconductors, this one down around 30%.
Yeah, NXP was a position that we also came out of. The semiconductors can be quite volatile, and ultimately we get stopped out of that one as well.
Now, Starbucks did a split. They split 2 for 1 in April, but we're showing a gain of 26% on Starbucks.
Yeah, we continue to own Starbucks. It's one of our biggest positions in the firm. We really like the consumer sector. It held up quite well through the recent decline as a group, and we see early strength coming off the bottom.
I see that Starbucks is in the crosshairs of the anti-sugar lobby right now. I think you can get some of their drinks 26 teaspoons of sugar.
Yeah, that's quite incredible. And the reality is that a lot of these companies are selling products that they have to post all the nutrition on, and it is what it is.
Yeah, I mean, I guess the bottom line is coffee is a fantastically profitable product.
Well, I have a very good friend who doesn't call it Starbucks. He calls it $5, because that's what it costs you for almost anything. But they have an incredible brand. There's perceived value. They have incredible levers in the business to drive profitability. They've got a growing footprint. And the consumer will pay for experience, and they feel they get experience going to Starbucks.
And they tried to build, I think it was the third place, your home, your work, and then a third place where you could meet or get things done.
That's right.
And it is a comfortable place.
And they've used technology to their advantage. Their payment system's working very, very well. Their smaller footprint stores are working very well. It's a great business.
And no national competitor has really emerged.
No,
there are chains, but nobody with that scale.
Yeah, there really are not.
Could they stumble again? I mean, they overexpanded. Howard Schultz came back. Have they learned their lesson?
Listen, I think that there's always risks. When you look at the business itself, it's very recession resistant. It is a business where you can continue to roll out new locations globally. There's always risks in any business, but they have done such a good job executing. It's hard to fault them.
I do remember years ago when you couldn't get proper coffee in London. I was on Oxford Street. I saw a Starbucks and I was, oh, thank goodness. The English coffee was awful at that stage. We're going to be right back with David Burrows, President and Chief Investment Strategist of Barometer Capital Management. North American large caps are the topic. The number to call, 1-855-326-6266.